In our last lesson, we discussed about market structure and we moved into the price chart, looked at how market structure is being read in the financial market. In today's lesson, we'll be looking at order blocks and we'll be reading how to make use of order blocks, how to spot it on the price charts, and how to trade them in the financial market. Hello, everyone. My name is Bulu Trade, an experienced SMC trader. I want you to make sure you tap on the subscribe button, switch on your notifications so you get notified whenever a new lesson or a new video is being dropped in this channel. So let's get on with it. Order block. In my own explanation, I will be defining what an order block is. And what is another block? Another block is a two opposing candle before a bullish momentum to the upside, or an opposing candle before a bearish momentum to the downside. So, what are the two types of order block we have? We have the bullish order block, we also have the bearish order block, just like how it's been drawn in this diagram here. I want you to remember this is just the theory aspect. We probably maybe in our next lesson we'll be getting on into the charts to be able to spot them in the financial market. So here is an example of the bullish and the bearish order block. First, let's start with the bullish order block here. Just like we can see right here and how we defined it. We said another block is what is when we have two opposing candle before a bullish momentum to the upside or a bearish momentum to the downside. Just like you can see here, we have a bearish candle right here. Then we also have a bullish candle to the upside right here. So this right here is what? This is another block right here. And if you look at it right here, you can see this is just the only bearish candle we have right here. So if anyone is asking you what is a bullish order block, a bullish order block is when we have what? A down close candle before a bullish momentum to the upside. That's for a bullish order block. Why a bearish order block is when we have what? Is when we have a bullish up close candle before a bearish momentum to the downside. So before you can be able to validate another block, before you can be able to say, okay, this very particular order block here is very valid and is tradable, there are certain confluences you need to take note of and you need to be able to understand better. So, what are these confluences? Number one confluence which you need to understand is what you want to always see what a break of structure before you can be able to validate your order block. So, let's assume we are in an uptrend and right here we have what we call a higher high right here. This is our current higher high right here. Then this very particular low right here is our higher low right here. So every previous low or every previous high will always be made up with another block. You always find another block within every previous high or every previous low. So right here now we have what? We have our higher low right here. And during the process when we have our higher low right here, where we have another block being formed around this level right here. Your expectation is you want to always see what? You want to always see a break of structure to the upside, which will give you a clear confirmation that what? That this very order block right here is valid and you can be able to trade it. The next expectation now is after giving you what? A break of structure to the upside. Remember your expectation is price will always do what? Price will always gravitate back into this order block, then continue its initial direction to the upside. So aside for having a break of structure, there's also another confluence which you need to be able to familiar with, which is what you want to always see what a fair value gap. So you might be wondering what is a fair value gap. Don't worry, now next lesson I'll be explaining to you what the fair value gap is. How does your fair value gap look? You can see right there we have what you can see we have a space within this order block right here. We have a space within these bullish candles right here. So this is what is called a fair value gap. And what is a fair value gap? Fair value gap is when we have a disparity between buyers and sellers. So price will always do what? Price will always gravitate back into this order block to continue its initial direction to the upside. So this is how another block looks like. So the next confluence which you want to be able to identify is what you want to always make sure that this other block here is fresh and unmitigated. What do I mean by fresh and unmitigated? That is, the more fresh it is, the more stronger it becomes, and the more tradable it is. Because if your other block hasn't been traded within it yet, or it hasn't been mitigated, then the more stronger and the more tradable it is in your own favor. That is, you tend to have a higher chance of making money while trading a fresh order block. So you want to make sure that what hasn't filled this order block right here and continue its initial direction. If it has filled or retraced back into this order block, then you have no chance or no opportunity or no decision to make to trade within a mitigated order block anymore, because it tends to be weaker. So you might be exposing yourself into a lot of losses. So these are the confluences which you need to be able to navigate in the financial market before you can be able to say you want to validate an order block in the price chart. So this is exactly how another block looks like in the price chart. The same thing goes with the bearish order block right here. You can see we have we have our order block right here. We also have what our break of structure to the downside, and you can see price broke through the previous low we have right here. So automatically, price will always do what? Price will always gravitate back to fill the other block, then continue with initial direction to the downside. So this goes both ways for the bullish order block and the bearish order block. So now that you've seen the theory part of how another block looks like, what I want you to do now is I want you to go into the price chart, see how to identify another block, and make sure you know how to use it better in the financial market and also make money from it. So this will be the end of how to spot another block in the price chart. So I hope this gets clearer and better. Have a wonderful day. Salute.